Welcome to the Bitcoin Macro War Room, where we jack into the market mainframe and derug the narrative. Plug into the pipes, M2, DXY, inflation, momentum, fresh prints, CPI, ISM, payrolls, rates, truth by facts, not vibes. Tweets and news rundown, meme to policy, curated, timestamped, tradable.
Welcome, you've got mail.
Copium not included. Roll the tape, let's invest like it's 1999, but with better charts.
Man, the 90s was such a vibe. People used to talk on the phone with each other, trading floors on the NASDAQ exchange. You had to actually go in the pit and submit your orders. Now everything's just electronic. Everything's just through a computer. It's all just a bunch of numbers on a screen. Anyway, I don't want to get too nostalgic. My favorite video to do each week, the Bitcoin Macro War Room. I have a ton of charts, some super spicy tweets, so stay around towards the end for those, and we'll take a look at all the data. So let's jump right into it. All gas, no brakes. We're going to start off, as we usually do, with the main chart. So you got global liquidity in the green, you got Bitcoin price down here, unfortunately, and then the regime tracker here on the bottom. And the main things that I wanted to call out was that we've clearly, in my opinion, we'll see if this is true or not, have bottomed in this channel. And I think we're going to start pushing up into 2026 and towards the end of the year. Global liquidity is still kind of in this chop zone around the red line here. So kind of up and down. We really need to see a push for this, but the indicator on the bottom is signaling expansion, which is very, very good. Again, China has been leading the M2 expansion this year, so that's really no surprise. But regardless, both of these things have stayed risk on, so not much to talk about there. I think we can move on to the shorter term charts. So we're in this chop zone. The FSVZO indicator down here has jumped into the top territory, which is something you want to see. You can see here in previous uptrends, it sort of stays above the upper band. So that's a good sign. The MA bands are green. The only sort of negative here currently is that we are printing a DMARC 9. So expect a little more chop, I would say. And again, for this chart specifically, this is for trend following only. It's not for mean reversion. So keep that in mind. I know I shared this last week, but this worked out almost perfectly. So this is Elliott wave analysis. Again, this is more short term. I was trying to find where the potential bottom is. I had 101.3 set as a potential bottom. We hit 103.68 and have reversed since then. Could we still see 101? Potentially, but at this point, it looks like we're building a solid base here. So there's still time in October. We got about a week left. We have a rate cut coming in, which we'll get to in just a second. But I did have two interesting charts that I wanted to share. That this one I created this week. And I love these because I always like to zoom out. So if I move my camera a little bit here, I don't know if you could see that maybe a little bit better if I compact it a little bit. But this is a global liquidity indicator here on the bottom that's sort of a MACD style. And you can see that pretty much for every cycle, including the original one, which I didn't actually show here when sharing this on X, but every time this flips and goes bullish, Bitcoin has enormous outperformance. We've been in that zone since February 2023. So we've had significant outperformance. I mean, Bitcoin is up 4 or 5x from the lows of 17,000. Now, you might look at this currently and say this is a little concerning that it's sort of crossing over again, but I wouldn't put too much stock in it. It can do that for a long time, and you'd still have a ton of outperformance. We are nearing the end of the cycle, though, and that is clear. And again, my thesis hasn't changed. Q2, Q3, 2026 is where I think we'll be peaking. So hopefully this gives you a little bit more long-term confidence, and I will continue to probably share this if there's any changes, but expect this to continue into 2026 in terms of this bull run. You can see even here for the third cycle, this indicator actually dropped back down and then went back up. And the entire time, basically, Bitcoin continued to rip. So we can move on to another chart. And this is the BTC divided by gold. So this is Bitcoin over gold. and the ratio on the bottom panel is z-scored. You can see that over the last 3-4 cycles, every time that this z-score has hit the -3 standard deviation band here on the bottom, gold has temporarily topped and the rotation play into higher beta, aka Bitcoin, occurred. We actually just hit this signal again earlier this month. So we hit the -3 standard deviation and we are now coming back off of it. Gold has had insane price performance for the last year. Everyone's been talking about it. Bitcoin has been lagging. And I think now is when we're going to see the catch-up trade. So another super bullish chart, just something to take stock of as we go further and further. All the top callers will be wrong. Cycles do not end based on an arbitrary number of days going by. That is all a pile of crap. And there's a great tweet at the end, which I'll share, that actually kind of confirms my view on that. But those are the charts for this week. With that out of the way, let's take a look at the data. And of course, US government is still shut down, so we've had less data releases, but we did get CPI today, and I think we actually did get flash manufacturing. So flash services PMI, which, remember, services is the biggest portion percentage-wise, so this is a really, really good print. I'm looking for the ISM to go into expansion territory above 50 in the coming months. So we'll see when those numbers come out. But this is a good print. And even the 52.2 over the 51.9 forecast for flash manufacturing, that did beat as well. So that's good. I don't know why this number is not green, but whatever. CPI, which is the most important release this week, which is inflation. And I'll explain kind of what CPI is in my notes next for people who might not understand it as well. It came in lower. So inflation is still not an issue. I think at some point inflation will reaccelerate, but that'll be later this cycle, probably next year sometime. So nothing to worry about there, and a good print. That's bullish for Bitcoin and for risk assets in general. And we can dive into what CPI actually is. So again, for any of these financial concepts that are overly complex and they make up all these words, you don't have to be in the fog. Just ask ChatGPT. It's very, very simple. Everyone should know what this means. So we'll go over this super quick. CPI stands for Consumer Price Index. Basically, it's how governments measure inflation. So if you trust the government numbers, this is what the inflation is. I actually like Trueflation better, but we'll maybe get into that in another episode. You can go to trueflation.com and see the true inflation numbers, and they actually are a lot better than what the government puts out. But whatever, that's a whole sideline piece I don't want to get into at this point. But basically, CPI tracks the prices of everyday things like groceries, rent, gas, healthcare, and compare them to last month or last year, which is what we got this week. If CPI is rising, it means life is getting more expensive. If it's falling, things are getting cheaper or at least rising slower, which I think is the important thing. We will not be able to get rid of inflation. It's just the rate of change that's important. And here's why CPI matters for Bitcoin. Bitcoin lives and dies by liquidity. 100% this is correct. How loose or tight money feels in the system. CPI tells the Fed whether to tighten or loosen that money. When CPI is high, the Fed panics about inflation. They raise rates, which we just came out of a rate raising cycle. Money gets more expensive, liquidity drains, yada, yada, yada. When CPI cools down, the Fed can relax, drop rates, which is what we're in now. The Fed is cutting actively. Money flows again, Bitcoin pumps. So that's pretty much it. Here in one sentence, you can see CPI doesn't move Bitcoin directly. It moves the money printer, which is liquidity, and that moves Bitcoin. So important to note, kind of a quick side quest there, but hopefully that gives you a really simple explanation of what CPI is and why it matters for risk assets and these numbers. Regardless, we can take a look at the Fedwatch here. So nothing much changed since last week. There was a chance of a 50 basis point cut. I think when we looked at this, a very small chance, like 5 or 10%, that has been knocked out. It's basically a lock that they're going to cut 25 basis points here on the 29th of October. So at the end of this month. For December, again, it is pretty much a lock that they're going to do another cut. So 50 basis points by the end of the year. And then for January, it's about 50-50 in terms of whether or not there's a third cut from now. And then when you go out to March, it gets a little bit more squirrely. But again, the probabilities haven't really changed. We've just kind of locked in the next 2 cuts for better or worse. I think for better, the Fed is behind as they usually are. So regardless, we can take a look at the system, and spoiler alert, nothing really changed. We've gained a couple of percentage points here on the forecast for risk on, just because the liquidity regime tracker and global M2 went to 1.0 from 0.5. That is the only change. All of the institutional research that I pay for and cannot share directly, but I can share sort of the composite. What is their view? Are they bullish or bearish? They're still very, very bullish. So all the institutional research, still very bullish. That's a huge W. And again, we stay risk on. Nothing has changed. We can look at some of these inputs for on-chain, but to be quite honest with you, nothing really has changed in the overall macro picture. We are still bullish. DXY rallied a little bit, now has dropped back down. You want to see that either stay in this area or continue to drop. You do not want to see a rally in the dollar, so keep an eye on that. For MVRV Z-score, this is still risk off. Again, historically for this cycle, these have been great places to add to positions in a bull market, not in a bear market. Obviously, in a bear market, this is going to be risk off the entire time, which is how you expect it to work. So same thing for STH, realized price. We are under the realized price currently, and that has been historically this cycle in the bull market a great place to add to your positions if you have dry powder or cash on the sidelines. So nothing has changed. This is still risk off. When we get to about 113K, this will signal risk on again. For the bull bear cycle drift, again, same thing. Nothing has really changed. We are decelerating given the price action, but this is still bullish and has been bullish for this entire bull market, which is great and also kind of crazy, but it's great. So you can see how it's performed over the long term. And that's pretty much it for the system signals. I went through the crypto quant really quickly, and the only thing that I wanted to call out here again was the macro heat phase, which you can see is in the dumps. It is underneath sort of this standard deviation green zone. And you can see that generally when it's here, it doesn't happen often, and it has marked a bottom many times. So this is a great signal, meaning hopefully the worst is over and we should be seeing some outperformance in Bitcoin. So that's a huge positive. The rest of the on-chain metrics didn't really tell me much, so we can move on to the liquidation heat maps really quick and take a look at what's going on in terms of trader liquidations and positioning. So we'll start with the 2-week just to get a zoomed in view, and then we'll kind of zoom out to the 1 month and the 3 month. But for the 2-week, you can see not much to really glean here. I mean, there's definitely some liquidations above 114, and there's some spot liquidations sort of in the 106, 104 area. So nothing major really to draw on from that. If we zoom out even further to the 1 month, you can see there are liquidations to the downside, but I would say that generally they are stacked to the upside. And then for the 3 month, which is the bird's eye view of the liquidation heat map, you can see it's kind of just spread out. And there's definitely a no man's land from 117 to 120 because of this insane wick where there is a fair value gap that is quite large. So I wouldn't be surprised to see price rally back up into the zone just to establish price equilibrium, but we'll see what happens. Again, my thesis hasn't changed. Still extremely bullish going into next year. So let's take a look at the tweets because I have some bangers for you this week, and there's a lot in here. So let me just get right into it, and we'll start off with number 1 here, which is from Charles Edwards, who works for Capriol, which is a great company. Definitely check them out. But the Bitcoin heater just turned. And if we take a look at the actual chart, let me move my camera. You can see that historically, when this thing bottoms in the bottom channel, you have significant price outperformance, sometimes right away, but most of the time it takes a little while. So it could be up to like a month, if not more. So be patient. I think November is when we'll really start to see the heat get turned on, and we should really be seeing some outperformance going into the end of the year. If there is this rotation out of gold and into higher beta like Bitcoin, you will definitely be seeing some gnarly pumps. So keep your pants on for that. Let's go to the next one here. On-chain mine, the BTC versus gold velocity indicator tracks relative momentum between the two. Right now it's flashing deep yellow, which is historically assigned to rotate out of gold and into Bitcoin. Again, this confirms my thesis as well. It's not a go all in signal, but a directional cue. This metric has nailed major tops and lows before. I made an entire video about how you should be fading gold right now and buying Bitcoin. So if you're interested in a deeper breakdown about the whole BTC versus gold thing, definitely check that out. It's on my channel. But you can see here, it's a great chart. We're nearing the bottom here, but we're not technically there yet. So we could have some more room to run. But regardless, the risk to reward is definitely there. Would I be buying gold here? Absolutely freaking not. When you start seeing people line up outside of bullion stores trying to get gold, the top is it. It's like such a classic top signal. I don't even understand. Anyway, Fei Zhao here with a great tweet. I know I've been harping on this for the past couple of weeks in terms of people calling the cycle top because of X days going by. It doesn't exist. It only existed because of macro forces. So here he lists out 2018 cycle died when Powell hiked rates. QT tantrum blow up, December 2018. 2021 cycle died when Fed went on the most aggressive hiking cycle ever. 2025, we're cutting rates and meaningfully easing. It was always macro, and the 4-year cycle idea was spurious. Thank you for your attention. My man here nailed it. Couldn't agree with this more. Let's go to the next tweet. Oh my God, this is a huge wall of text, but I really think, this is a great tweet. It kind of sums up my whole ISM, business cycle, dollar, global liquidity thesis for Bitcoin. So I don't want to read out the whole thing. You can pause it and read it if you can. I know it's small, so you can look up his account, read the full tweet. It's a great, great tweet. Basically, what you want to take out of this is, in other words, we are looking at a continuation of the macro cycle for at least another 6 months. My personal base case is that the macro cycle will extend well into 2026, which has very positive implications for risk on assets like Bitcoin and crypto. TLDR, you're not even remotely bullish enough. And since I have started this show, in my system, I have kept this cycle peak estimate of end of Q2 2026. I think originally it was Q2 2026, then I put end of to clarify, but that has not changed since I started this show. And it's kind of crazy because I have now done, I think this is episode 19. So 19 of these weekly shows, 19 weeks of this. And my thesis has still not changed. And I think Andre here nails it. So great tweet. Here is the chart. It's G20 net rate cuts shifted by 6 months versus the Philly Fed 6-month forecast. So this should move the ISM into positive territory. That's going to be super bullish. The Fed is ending quantitative tightening and they are easing and lowering rates. Powell will be out by the end of the year and he will be replaced with a dovish sycophant. You best believe it. We might even see negative rates. Check the receipts, sue me, send me hate mail. It might happen. You never know. Crazier things have happened. Anyway, Tang here, the crypto orangutan. Great account. This may surprise some, but BTC's main driver isn't the halving. It's not the 4-year cycle. It's macro, especially today. It used to align with BTC tops until the 2021 and 2020 money flood broke the usual rhythm. And now while everyone's bearish at the quote unquote usual top, it prints into 2026. Delayed, not derailed. Another great tweet. Another confirmation of my thesis. And yeah, the chart here is great too. I don't know what he's using for his macro composite. I would be interested to see what it is. I have my own that I obviously share. We look at it at the beginning of each video. This is my macro composite here on the bottom, but I do like his as well. Always looking for new alpha, new data. So that's pretty much it for the tweets. And that wraps it up for this week. That's another week in the books. That's a wrap. I hope you enjoyed this. First of all, if you made it this far with me, if you stuck around to the end, thank you so much. You don't know how much it means to me. I really appreciate it. Sometimes I feel like I'm sitting here screaming into the void, recording these videos for myself. But to be honest with you, it's a nice way to cleanse my mind and ensure every week that I still believe in my underlying thesis and that things haven't changed and that I shouldn't be repositioning or selling into the fear or doing anything stupid outside of just sitting on my hands. So I enjoy making this video every week. It's my favorite video to make. So I really appreciate you watching out there. And if you did like the video, you know what to do. I'm not even going to ask you for it. As always, have a great weekend. I'll see you next week. Cheers.